Will Landers is the portfolio manager of the BlackRock Latin American Fund. He manages $8.7 billion at BlackRock, joining me now from his firm's studio. Will, good to have you back on again. I know we often talk to you about where to invest in Latin America. Brazil, though, very hot. I've heard that over and over again. We had a guest on earlier this week who was really big on the property market in Brazil. But you yourself have said that so far in the first quarter for your fund hasn't been as great as last year. What's going on there?
Well, I think people did take a little bit of a break here in this first quarter. The news first about China slowing down, then all this news around Greece gave investors a pause. There was a little bit of less risk appetite in the markets, and given the returns that the Brazilian market gave to investors last year, I think it was one of the areas where people took profits. But for us, it's been a great buying opportunity because when we look at Brazil this year, it's going to be one of the fastest growing economies in the world. As you're talking about the home building sector, but it goes beyond that. It's really the consumer sector continues to be our main focus. We continue to see the middle class expanding, purchasing power increasing, credit availability improving at lower costs. So with all that, we get very excited about the domestic side of the equation. And on top of that, you get things like Petrobras and Vale on the cyclical side, which are important parts of our portfolio,
right.
But also don't give you an opportunity to invest on both sides of the equation, if you will.
But you say but haven't you said before that when you're investing in Brazil, though, if you're going to look at stocks, you want to stay in the most liquid ones, right?
Last year it wasn't the case. I mean, we actually have a small cap fund out in Europe that was the best performing fund of all Latin American funds, and is really there was the less liquid names. It's a fund focused on the bottom 30% of the market cap of the market. So last year the small caps actually outperformed the large caps. So the smaller our funds gotten.
But that's unusual for you, though. That's not really where you've based your growth, though, in the last few years.
Well, when you look at Latin America, it is a market that's very much focused on the large cap names. So you can't get away from the Petrobras, the Vales, the Itaús, the American Mobiles. And the good news is that I think in many of those names, there's a lot of upside still. We still see good opportunities there. But I think one of the reasons why we have had that good track record over the 5 years is that we've always had 35–40% of our funds invested in small mid-cap stocks, stocks that are less covered by the sell side. And if you don't have a team that's been looking at this for a long time, like our team has, you probably have a little bit more difficulty investing in these names. But they're names that have done very well for us. And when you look at the housing sector specifically, Cirela, which is the biggest company in that sector, it's still a mid-cap stock. So you're not talking about the most liquid name stocks that are trading more than $50 million a day.
Right, the biggest of the big caps then. But Will, is there anything, though, in the last, let's say, 3 months, this first quarter when the market's been taking a bit of a breather, anything that you've actually looked to get out of?
Well, I mean, we did reduce Mexico a little bit. Mexico has been an outperformer in this first quarter, as far as I can tell, for two reasons. One, because people are playing it as a recovery play on the U.S., and as you have talked to other folks at BlackRock, I mean, our view is that we are going to have a recovery, but it's not going to be that great. So that's not very good news for Mexico. And on the second side, I think people were looking for the underperforming markets last year, and Mexico was an underperformer, even though it was up 50%. Neither good enough reason for us to be overweight Mexico. So we have taken some money off some of the Mexican names, like Cemex on the cement side, which has had pretty bad results in the fourth quarter, and probably first quarter is not going to be much better. And then we have redeployed some of that money into some of the underperforming stocks in Brazil.
Well, I just want to, I do want to know, interestingly enough, is that, right now the oil price, for instance, has been going back up. It's now at a 17-month high. That must also sort of solidify your view of going towards the resource stocks in Latin America, right?
Well, you look at the biggest stock in Latin America, it is Petrobras. It's one of the fastest growing of the large oil companies in the world. I think what's holding back the stock a little bit is the capitalization that's going to happen, hopefully this year, where the government's going to put 5 billion barrels of more reserves into the company, take shares back, and then minority shareholders will get to participate in one way or the other. So I think that's holding back the stock a little bit. But clearly, oil prices going up is good for Petrobras, is good for the Mexican economy overall. It's even good for some of the economies that we don't like very much, like Venezuela.
Okay. All right. Well, we'll have to leave it there. But good to talk with you, as usual, Will Landers at BlackRock.